Good day, good jobs. My name is Carden Madzokere, and I'm the author and publisher of the Distinction Bound Student Textbooks. I would like to welcome you to Activity 1.9. Now it says, study the diagram below and answer the questions that follow. Okay, again, we see something that we've been seeing quite often. We have a two-sector model once again. So we have businesses, we have households, and we have the two markets, which is the product and the factor market. So we know that a product market is a market where goods and services are traded. And then a factor market is a market where factors of production are traded. And our factors of production are land, labor, capital, and entrepreneurship. Now let's have a look at the questions. That's all we have here. Yeah. Expenditure. Businesses spend money on the factor market. We spend money on the product market. And then when businesses spend on the factor market, it's revenue to us. When we spend on the product market, it's revenue to the business. Now, what questions do we have? What is depicted by the diagram above? Well, this is a two-sector model. This is a circular flow model. Anything like that. Identify one example of real flow. Okay, so this is money flow. You see it? Then real flow is outside. And we say real and money flow in opposite direction. So what do you see which is not revenue or expenditure? You see goods and services. So that's an example of real flow. You also here see production factors. So you can write there factors of production. Briefly describe the term product market. I did already. We said a product market is a market where goods and services are traded. Then number 4, what could the Minister of Finance do to promote economic activity in South Africa? Well, one thing that the Minister of Finance can do is to be expansionary with his fiscal policy. So that can be the finance minister lowering tax and increasing government spending. That is definitely going to promote economic activity. Anything you can say beyond this can still be correct. Maybe you can say when the finance minister implements policies that simply encourage economic activity. So any policy you can think of. Then how can foreign direct investment influence national income? Well, this is investment. First and foremost, foreign direct investment or investment by itself is an injection to the economy. So foreign direct investment definitely increases production capacity. Like it gives opportunity for economic participation. So anything that you can say along those lines, something like increasing aggregate demand, maybe, because if money is invested in our country, we are going to use that money to demand whatever it is that we may need. So opportunities are created. So at the end of the day, that's more or less what you need to be talking about. Let's have a look. So the diagram depicts a circular flow model or a two-sector circular flow model or just a two-sector model. And identify one example of leakages. Yes, we had these two. Pick any one. We saw that. Then briefly describe the term product market. It's a market where final consumer goods and services are traded. That's exactly what I said. Then what could the Minister of Finance do? Well, there are a lot of things you can say here. Creating more confidence in macroeconomic policies between all role players in the economy, developing an investor-friendly legislation, anything along those lines. So basically, this is a 10 out of 10, basically. So we haven't really encountered a scenario where we don't really see a clear 10 out of 10. Maybe I'm going to just do a run through everything once I'm done with the 10th activity. Well, this brings us to the end of this particular lesson, and thank you so much. God bless.